So this is another trading hat on lesson, as opposed to the more theoretical quanti kind which we have on Monday. So this is pretty much where we left off. Things were great. I'd gotten long quite low. I'd gotten long quite low. So we were well into profit already. This was the weekend, I think, where the Greek Parliament were passing something, and so the market jumped again. And this is when we kind of started the Friday trading lessons. What I did here was actually sell a little bit of my position, because, you know, it was a nice up move. I expected a little dip, and I didn't want to be too highly leveraged. Now that's a relative term. I'm always in this trade, I'm very leveraged, since I'm spread betting on the DAX. So, you know, you need maybe a margin of 50 to buy basically €11,000 worth of one DAX. So in that context, so what was going to happen? Well, it had just moved up, and it had broken the sequence of higher lows or lower highs. You know, so when it tried to go up here, it only reached there. When it tried to get a new high here, it didn't manage to go up as much as before. When it fell further than the recent fall. When it tried to go up, it didn't get anywhere near the recent high. So these are all signs of things being in a downtrend. We also had the real data. You know, we had the whole thing of what was going to happen in Greece. Those concerns meant there was higher risk, which nobody wants. So, you know, you want to take your money out of a risky situation. And so, you know, it's not surprising the market was dipping. At the same time, initially I'd gotten into this trade because the market had fallen to about the 200-day moving average, which is a significant level. So that's kind of some of the background. At this stage, I'm looking at this and going, okay, with the Greece situation getting resolved, or making progress on that, it's going to be a multi-decade kind of thing, though I'm actually pretty bullish on Greece. Unfortunately, I'm not able to, my spread betting account didn't have a Greek index. So, you know, I'd like to buy Greek, you know, banks and Greek stock exchange, because it should be at a low now. So that's an aside. So I'm thinking the DAX is now free to move up from the 200-day moving average and just return up past the 100, up past the 50, and trend forward. in a bullish way. So the starting point in a way is to decide, is this a bull market? Is this a bear market? My call was, this is a bull market, because it tried to go, it did a test of the 200-day and it just jumped up. And typically, when that happened, it tended to keep going up for a good while. So there was a nice opportunity there to make a trade. Now, in this case, so I'm thinking this is a bull market. I can see the market going to 12,400, 13,000 even. I'll see where it takes me. So I'm expecting it to go to 11,000 or 12,000 in the short to medium term, and then then it'll have to test the recent, all-time high 12,400, and I think it can. There's no reason why it won't smash through there. We've just had all-time highs for, I think, the Nasdaq the other day. So markets are moving up, which is not a surprise, because if you have interest rates at near zero level, where's money supposed to go? I mean, if you just have it sitting there making 0% return, that's hardly the optimal thing to do. So basically, in short, feeling good, feeling bullish. Now I'm expecting a pullback, because that happens periodically. I'm a big believer in the gap, or the theory of gaps, as in, like, the market does not like gaps. When it jumps, it tends to at once, soon enough, go down and test that base. Basically wants to go back down, get to this level, and then it can continue on its journey. But until that gap is filled, I'm always kind of a bit uneasy. At the same time, the fundamentals were still very bullish. So I'm thinking, okay, I sold some at the top here, because just see what happens. But I felt, this was a recent top, so that might be as far as the market fell. It might not even fall at all. It could just keep zooming up. So, it's a tough call. So the RSI was, up to extreme. So, I'd look for it to kind of fall back a bit and just cool down. But I didn't know really how far. 50, that seemed like a nice level, because when you're bearish, the market tends to try to go up, but it only makes it up to 50 and then falls again. So often that's a nice trading method. You wait for the market to get bullish again, go, oh, it's okay, and the markets start going up. But once it hits RSI about 50, it falls, and it falls even further because it's a bear market. So now, if the market, having gone down to 200, the 200-day moving average, the DAX, then and that's in the 1 day, so it's a 200-day, as I said. So then it'll basically be going upwards, and when there's some pessimism, when there's some selling, it just will fail to drop much. When it's in a bull market, it'll fall a little bit. The RSI will maybe go down to 50, but that'll be rare. And in fact, if you plot it with not only have more moving averages, because I mentioned before, in trending markets, moving averages are very handy. So you'd look at the recent behavior of whatever market you're working with, and you could kind of see, okay, the market seems to be bound by maybe the 20-day moving average. So when the prices fall, they only manage to fall up to 20 before they start shooting back up again. It might even be held above the 10-day moving average, or in very bullish markets, even the 5-day. So with that in mind, I'm thinking this, and even looking at a couple of recent 200-day moving average tests, the market just tends to go up, 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 up. It doesn't dip much. So that's what I'm thinking. I won't get an opportunity to buy this market cheaply. I'll be sitting there going, oh, I'll buy it when, I'll sell now, I'll wait for it to dip and then I'll buy. But then the market just goes away from you and you don't get to buy it again and you don't make anything. So I mean, there's no such thing as a free lunch. You have to bear the risk to be able to reap the rewards. So what happens? It falls. So here I thought that 11,760 might be a nice entry point, or that's a nice support, because you have the recent high there and you have, when it tried to fall, that seems to be providing some resistance. So what happens? Boom, breaks through. So then again, we don't know where is the resistance going to hold. So it just falls, also falls here. Again, 2 wicks there, they might provide support. And this area, from this period, the market moved around a bit at, 11,720. So that seems to be a potential resistance, or support in this case. So that's a potential entry point. I wouldn't be surprised if I didn't buy at this stage, because I'm still very bullish. At least it's fallen now, so I was waiting for it to cool down. This area seems to be a band which was support, so there would be resistance for the market to fall through it, because it's already thought about this. It's already dealt with 11,720 and it went through. So, and also Fibonacci retracement levels. I might talk about that next week. That's a method used when you're dealing typically with trending markets. So if that was the recent low and it jumped up and that's the recent high, the Fibonacci levels would be, say, a half, and there's 38%, 62%. They're levels which occur again and again, actually throughout the universe and nature, but they occur in the markets. So if all I know is this was the recent low and this was the recent high, well then I'd be interested in the midpoint. So that added even further weight to buying at this level. So now we have 3 points. We have that there was this band. There seemed to be some support there. It's showing some price action. That the market seems to be turning around here, and it's a Fibonacci retracement level. So what happened. That's the thing. When you're trading, you are often in this kind of situation. You are trying to predict the future, even though you know you can't. I mean, that's the art. So move on. So this is, again, I'm feeling good. You know, we're starting to get some action. The price is moving up. I'm expecting it to really gradually ease back up to 11,800. The RSI has fallen to actually down to 40. But it's turning around to 50 again. Yeah, it seems, I would say it seems to me a bit oversold. So, feeling good. Still staying level. Boom, 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 boom. So, that's pretty healthy. You know, you have the RSI at about 50, so the market's no longer overbought. It's worked off some of the steam from this recent gap up. Though, you know, there's still a bit of a gap. I'd like it to go down to 11,680 to fill that gap. But the market's bullish. I might not get the opportunity of the price going back down here. So, wait and see. But I'm still long the market. Fast forward. Boom, boom, boom. So this is looking very nice. The market's still staying steady. It's gone down a couple of times, you know, but it hasn't. So when it worked down here, this was the low, and when it tried to retest that, it didn't. It either stopped at the same level, so 11,715, but it even if it broke up by 1 point, it didn't. There was no follow through. So now I'm feeling happier that the market's not gonna break down. I mean, it jumped up, but it seems quite calm, and the support is looking good, or looking fine. Boom! Now that's not good. So moving forward, you see it's moving along, but it's now broken through 11,715, which was a support. Now I don't know where it's going to go. Now I kind of go, ooh, maybe I should have sold it. I should have sold more and bought it at this lower price. Maybe, you know, because now since it's broken this resistance, it can go all the way down to, I wouldn't be surprised at all if it went down to 11,680. Then the gap is filled, and then there's no worries to go long. You know, it's a bull market. The gap has been filled. The RSI is oversold. I can return on my way back up. So, not liking the fact that it's fallen by this amount, because that wipes away, or that reduces my profit significantly. Though I'm still comfortable, since I actually entered at a far lower price. Well, lower price even. So, okay. I'm waiting for it to go down to 11,680, which was where the gap began, and then the gap will be filled. But I'm still moving along. Oh, sorry, I'm doing the wrong thing. I'm zooming in as opposed to moving. Now 11,700, that's a round number. That might provide some support. So that might be hard to get through. It's fitting around. Oh, there you are. It did do a little tester through the 11,700, but now it's gone through. So 11,700 is broken. Boom. Now it's down to 11,678. The gap has been filled. So now it should be free to maybe range trade a little bit, but then continue on the way up. But there's more a sense of concern now because it has fallen so much. And I don't know, it hasn't shown signs of stopping. I would rather it stopped. I would rather it started going up. That's trading for you. Ooh, keeps falling. So now I'm going, okay, maybe this recent low, okay, 11,650. That should be the support, and then at least it's very oversold. The market will have shaken off the very leveraged or easily shake offable people. Ooh, yeah, okay, 11,650. It's now broken below that. I'll zoom. So now, you know, this is lower than the recent markets, you know, so we're entering into, I'll zoom back a bit there. Okay, so zooming back a lot, we can see, yes, it's fallen, but we began way back here. So, you know, it could fall all the way back to there in a way. Again, with my Fibonacci hat on, I'm thinking, here's the top, here's the bottom, boom. That's about middle. Yeah. So basically we're near a Fibonacci level. So it might stop at 11,650. Here you can see there was a high here. You know, the wick. That seems to be about 11,650 also. Okay, 11,650 is our next potential support. That's where it's gonna stop. It should bounce off there, all is well, because I have my bullish cap on, bull market cap. Now this is still falling. 11,609. So now I'm thinking, okay, hopefully 11,600. Maybe 11,560. I don't know. I mean, it's fallen quite a bit. So all you can do is sit back and fingers crossed. Now you just have to hope that you. So by this stage, I had multiple trades which had stop losses. So that if the market fell here, they would automatically get triggered. So then my leverage would be constantly shrinking. So, you know, I might have bought it here and said I might have bought it here and said if it goes up to 12,000, then sell. If it goes below this, then sell. So then that would give me, you know, a 3-to-1 or 4-to-1 win-loss ratio, something like that. So as the market falls, I would be taken out of various trades, which, you know, you don't like. You might take losses, but if I hadn't done that, you know, I mightn't have reduced my holdings at this stage, and those bets would now be, you know, big losses. Or not big losses, but losses. So that's something you have to be mentally prepared for. It's all great when the market's going your way and you're just making lots of money without seemingly doing anything. You're just sitting there and going, oh, I just made whatever, yay. But it's this period and how you handle it that, you know, is gonna matter in the long term, in the long run. Still falling. So now you're looking at, okay, maybe 11,480, 11,500. Ooh, you know, I mean, because when we began, I was looking at 11,800 and thinking, I'm on my way to 12,000. You know, it's going to be imagining what I was going to do with all the winnings. And while I was imagining that, the thing collapses. So, ooh, still falling. You know, there's no sign of a turn. There's no sign of momentum going my way. It is just pretty much in rapid freefall. Often the market goes down as quickly as it went up. You know, so at the moment it looks like it's going to fall down to 11,480 as rapidly as it went up. Now I just want to zoom back a bit more, because now we're trying to go see how much further could it fall. So does 11,440 look okay? I'm saying 11,480 is my best hope at the moment, because, you know, you've got, it's been tested twice already and the market's quite oversold, though the RSI tends to be more helpful if you're in a range market. You know, when it's the market's moving up and down within a certain within two levels, so that way when the market's near the support, near the bottom of the range, then the RSI will tend to be quite low, so you want to buy near the bottom of the price range, though you're expecting it to go back to the upper end of the range, so you'll be in profit, so you sell then. In fact, you sell, you go negative the price when it's at the top of the range, because you're expecting it to fall. But I'm more thinking while this is going on, ouch, I'm losing money at a rapid rate. I can't actually maintain this for that much longer. I mean, it was supposed to be held by 11,750. Now 11,520 is a good bit away from what I was thinking. Finally some turnaround. Now I would like it if it managed to break above 11,600 on the upside, because that would be finally a hint that the market is turning, that it's good for people who are long the market. Fingers crossed. Okay, I'm zooming ahead now. Okay, so this is today, this moment. So not great. It didn't even manage to test that level. You know, it might have gone up to 11,600 and then gone down, but it didn't even get up to that level. So, you know, that's quite bearish. So that is a lower high. And then when it fell, again we got a lower low. It found it easy to keep falling down. Here it tried to go up. Again, a lower high. This is falling. So Now this is later on in the day, so the markets tend to be kind of shutting up at this stage. So it should kind of calm down to RSI 50, and then it'll deal with things tomorrow. But now 11,480 is a multiple support. It tried to get there just now, and it didn't. And it didn't even manage to touch 11,480. So that's mildly, we're grasping at straws here, but it's mildly bullish. At least there's some green action there. So I'll zoom in so I can see. So at least there were a couple of green candlesticks there. We don't know. So that's where we are today. As a trading lesson, what did we learn anything? Well, we mentioned the Fibonacci retracements. I'll actually do more of a lesson on that next week, so that because that it's a handy framework. And another one which I'd like to have a lesson on the trading perspective, which I mentioned, but I didn't flesh out, is the whole risk reward ratio. So there, just so that we have something that we gained for those who stuck around all the all this time. In the risk reward ratio thing, what you want to do is you buy some, like say I look at this and go, oh, this is going to be my resistance. So then when the price is down to 11,500, say tomorrow, I buy, and I have a stop loss maybe 25 below, say 25. Then I go, I'll take a limit, or I'll put in a limit order so that I take profit if it hits 11,550. Now you might be going, oh, why don't you hold on to 12,000? Or no, just getting this idea across. So if you bought at 11,500, and if you win the bet, you will win €50. Again, I'm saying euros because that's what I'm trading in. If it falls to, if it falls 25 below, then I will lose 25. So that means essentially I only need to win 1 out of 3 bets to break even. Because if I win once, so I make €50. If I lose the other 2 bets, I only lose 25. So that way I'm able to kind of nudge the game in my direction. So I work the odds in my favor. Now, you can't just pick a random I'll say now, if I look at the market now and I go, oh, I'll buy it now and I'll look for 25 loss, 50 profit. But here at 11.35, there's no real resistance 25 below it. So, it could easily drift down there. And 50 above would be, up here. So then it would actually have to cross this resistance. Looking at this period, looking at the high there, 11,575 seems to have some resistance. So if I wanted, for me to win, if I needed it to reach 11.85, it would have to cross that resistance. So, you could win, but you want to pick your battles. You want to enter the price at spots where there's a resistance quite near below you, and you take a loss if it breaks that. And so really that should happen less regularly, and so that's why you only need to win 1 in 3 using the I make twice what I would lose rule, and that's a nice bet to make in general. So basically you're looking for those kind of bets. So we'll talk about that later as well, but next week, Fibonacci. If you have any comments, things you'd like to hear more about, just comment, and we'll get around to we'll add those to the list of things we're going to cover. I was trying to make sense, which is typically the case, of why the market was doing what it was doing. I mean, you could tell that the market should be going up. Interest rates are incredibly low. The euro is very low. So all the companies in the DAX should be, I mean, they were doing well anyway, because they're good businesses. They produce very high quality goods. So, they're doing well. The interest rates are not low to stimulate the German economy. The German economy is doing fine. So they're actually turbocharged. The interest rates are low to help in a sense, the Southern European companies, or countries, Freudian slip. And the euro's dropped by 20, 30, 40%. So the German companies were doing very well anyway, but suddenly, increase their profit margin by that amount. This is the most profitable period probably in German history. So the DAX should be absolutely flying up. Not only that, the DAX is quoted in euros. So if the euro drops by 40% and the earnings are the same, since a lot of the earnings are global, the DAX should go up quite a lot. So you have so many factors playing into being long the DAX. And we got in when the price was low. So why are prices so low? Because there's risk. Basically, the primary thing that seems to be going on now is, well, Greece. Is the European project going to hold together? Blah, blah, blah. And in that respect, what's going on is another vote by the Parliament. So if that is passed, then another bailout is made, or another payment is made by Greece, so things can continue according to the plan that was so hard fought over the recent period. So yes, we had one vote by the Parliament, remember, and so the DAX shot up when that was a yes. Well, we're having another one now. So that's the missing piece. That's the thing I was doing other things. We have guests. Yeah, but basically, I wasn't following. I wasn't aware of the vote today, and that would explain why the DAX didn't just have a mild pullback. I mean, okay, it's still only a mild pullback from the recent highs, but that's why it makes more sense to me now why the DAX behaved like it did. So now it's kind of in a more cautious mode, waiting for the vote. And if it's a yes, well then I expect the DAX to shoot up to 11,000, probably 800. Maybe it'll shoot right through to 11 or 12,000 even by the end of the week. If it's a yes, which is highly likely. Remember, essentially, you've got the main party who are in government, who are the more left-wing party. They won't have enough votes because they have internal conflict. So they won't be able to pass it themselves, but the opposition are very pro the European Union, the austerity. They'll vote yes. So like in the previous vote, the actual ruling government are not going to have enough votes to actually pass the bill to get the yes. But the vast, like 90% of the opposition will all vote yes. And they'll give, if it's something to follow on Twitter, they'll all give long, harsh words to the ruling party about how they've messed up and how a lot of this pain is due to how they've messed up. Because remember, if they just agreed to the conditions which were on offer a couple of weeks ago, they were a lot nicer. They were basically better than the conditions they have now. So if they hadn't, done what they did, the pain wouldn't have been as bad. But from my point of view, I think I'll buy another little bit of the DAX, be slightly more long, and see how it goes tomorrow. Remember to subscribe to the channel to be kept up to date on how the trading's going. We're going to be looking at, as I mentioned earlier, Fibonacci and risk-reward ratio, that kind of stuff, in the coming weeks. Fingers crossed.